Hello everyone. Welcome back to Edu Vedanta Smart Classes, where we make complex topics easy and interesting. Today, we are diving into a crucial pillar of the Indian economy, the banking system. This is an essential topic for UPSC, APSC, and other competitive exams. So, let's get started. The banking system is the backbone of capitalism. It plays a major role in economic growth, financial stability, and money circulation. But have you ever wondered how banks are classified? Or how the Reserve Bank of India controls everything? Let's break it down. The Reserve Bank of India, RBI, is the apex financial institution of the country. It was established in 1935 based on the recommendations of the Hilton-Young Commission 1926. Later, it was nationalized in 1949. The RBI governor serves a term of 4 years, with the current governor being Sanjay Malhotra. Functions of RBI: monetary policy, controls inflation and liquidity. Banking regulation, ensures financial stability. Currency issuance, manages note printing and destruction. Foreign exchange management, stabilize the Indian rupee. Lender of last resort, provides financial support to banks in crisis. Did you know? The 1 rupee note is not issued by RBI. It is issued by the Ministry of Finance and is backed by the Government of India. While rest all other notes are printed by Bharatiya Reserve Bank Note Mudran Private Limited, BRBN MPL, subsidiaries of RBI. BRBN MPL, Bharatiya Reserve Bank Note Mudran Private Limited prints currency notes. DICGC, Deposit Insurance and Credit Guarantee Corporation, insures bank deposits. NABARD, National Bank for Agriculture and Rural Development, supports rural development. NHB, National Housing Bank, regulates housing finance. SIDBI, Small Industries Development Bank of India, supports small industries and startups. Classification of banks. Scheduled banks, listed in the second schedule of the RBI Act 1934. Commercial banks. Public sector, for example SBI, PNB. Private sector, for example HDFC, ICICI. Foreign banks, for example HSBC, Citibank. Regional rural banks, RRBs. Co-operative banks. Urban co-operative banks. Rural co-operative banks, Sehkari banks. Non-scheduled banks, not listed under the second schedule. Payment banks. Do you use Google Pay, PhonePe, or Paytm? These are examples of payment banks. They allow digital transactions but cannot provide loans. You can keep a limited balance in wallets, and instead of interest, they offer cashbacks. Development banks. NABARD, loans for agriculture and rural projects. SIDBI, supports MSMEs and startups like Make in India, Startup India. Exim Bank, finances international trade. IDBI, helps industries set up new projects. IFCI, provides financial aid for industries. Domestic Systemically Important Banks, DSIBs. Some banks are considered too big to fail. These are called Domestic Systemically Important Banks, DSIBs. RBI classifies banks as DSIBs if they hold more than 2% of India's GDP. Examples include SBI, HDFC, and ICICI. And that's a wrap. Today, we learned about RBI and its role in banking, different types of banks, digital banking and payment systems, development banks and their objectives, systemically important banks in India. Do you want more videos on banking and finance? Comment below and let us know. Don't forget to like, share, and subscribe to Edu Vedanta Smart Classes for more insightful lessons.